Shares of Taiwan Semiconductor up more than 6% after its chief executive said the company expects a further easing to the chip shortage that has hammered the automotive industry. Yahoo Finance's Dan Howley has the details. Dan, a little bit of bright news here.
Yeah, a little bit. Right now, they're saying that they still don't have enough wafers to meet demand, but they expect that to ease pretty quickly in the coming months. You know, the automotive industry obviously has been hammered with chip shortage. We've seen vehicles from various manufacturers sitting in lots just waiting for chips. Obviously, the whole issue during the pandemic with used cars was people wanted those because they already had the chips built in and new cars didn't, so used car prices skyrocketed. They've since come down and are continuing to come down, and we're seeing more chips available, but some companies still looking for those. But TSMC overall says that for the most recent quarter, they had a record gross margin of 62.2%. That's up from 52.7% a year ago. Their guidance was a little bit lighter than analysts had wanted, though. They are guiding for $16.7 billion to $17.5 billion in Q1. Analysts wanted $17.9 billion. And so what they're doing is they're trying to cut costs as far as CapEx goes to kind of make up for that decline that we're seeing in the chip market. Now, they're saying that obviously they're going to have a revenue decline in the mid to high single digits in the first half of the year. But then they basically, kind of poo-poo the competition like Intel, saying that, the other members of the industry will have problems throughout the whole year, but we're going to have some return to positive revenue in the back half of 2023. So they're essentially saying, look, we have enough products. We have this huge range of capabilities. We're going to be doing well. We'll have to see. The entire chip industry right now is clearly hurting. The pandemic saw supplies a shortage of supplies, in the first part of the pandemic because, companies didn't think people would buy anything. Oh, wow, people did want to buy things because they needed computers. So then we saw a huge ramp up. Now they're dealing with the leftovers from that ramp up. And so people at this point just don't need new computers. They don't need new devices that may or may not need these chips. And so these companies are just sitting with these chips at this point. PC makers, smartphone makers, they're dealing with the same exact thing. So we'll just have to see how this shakes out for the next year or so because, outside of TSMC with these kind of somewhat rosy predictions for the end of 2023. We have Intel, NVIDIA, and AMD also continuing to struggle as far as the chip market goes. So, it really is anyone's guess at this point.
And it's been tough timing what the consumer wants and being able to get it with these supply chain snafus as well. Dan Howley, thank you so much.